I'm Dale Pinkert. I'm the anchor here in FX Street's live analysis room, my trading warrior brothers and sisters. So the call for the crash in the dollar was correct, and the call for the bounce was correct. We're continuing firmness in the dollar inside day today. I was talking about 95 and a half, 95, 95 and a half. Now it looks like it could stretch to 96. I still don't think we're going to blow to new highs in the dollar, and looking for shorting opportunities within the next 48 hours in the dollar, potential buying opportunities in euro, shorting opportunities in the yen. Yen's really not making much hay out of this S&P correction, which yesterday, if you watch the pre-LAR market roundup, I said there was potential for an outside day to the upside. Didn't quite make it, but was a powerful recovery after taking out the previous day's lows, almost an outside day. So at the beginning of the week after the washout, I said potential retraces to 2020. So we're still about 60 handles away. If you look at it in Dow terms, I'm thinking about 16.8 in the Dow to 17,000, and then 12,000. Looking for 12,000 potential in the Dow into the October-November time frame. Hard for me to believe that the dollar is going to have a hayride once we start to roll over again to take out these lows at 1830. So the reason I think 1830 is going to give way is all you have to do is look at the weekly chart. Let's go to the weekly nearest on the S&Ps, and we got all the way down to last October's low in October 2014 right here, almost. So once we take out 1860, looks like what was the low here on nearby futures, got to 1831, so 300 handles here from the high, 2130 or so. 300 handles under this low, going to take you to 1530. If we get equality after a bounce, say to 2020, that's going to take you down to 1720. So eventually I am looking for this to give way. Perhaps it's going to round out some type of shoulder in the next few weeks. Call this the head, call this the neckline, and we get some type of shoulder before the rollover. So close to a reversal week to the upside after all the panic that we had. And a lot of people are going to say this is the bottom and we're going to blow off to 2200. You know, everything can happen in this business, but this was pretty impulsive, and we got almost all the way back down to last October's low. I think that they can clean out stops under this low, into the perhaps early October time frame. Yesterday as well, I talked about a pop in crude coming. Crude's up about $1.80 today. Let's take a quick look at it. Thought we could rally back to $44. I think we're trading at 41 or so, and Canada is under some pressure. Looks like it may have finally topped. Go with the daily here on the crude. And also gold pulled back, trying to put in an update today. So here's crude coming out of the hole up about 160 today. Talked about the potential of a rally to 44 to 46. That looks to be underway. And just a quick look at the gold. Held at about the 50% retrace level. This is going to be a pretty key area for the gold. So we rallied $100 and we pulled back 50. So I'm not sure if we're just going to blow from here or there's going to be some action between here and 1110, but this could have been enough to shake out people that were chasing it. Still not prepared to buy it here. I'm not going to buy it here. I'm going to look and see what happens over the next couple days. Actually, gold trying to pop again with the S&Ps and a fairly firm dollar. So it's a stand aside for me. See what kind of cycles we get into. We have a planetary event this weekend. Full moon. It's a super moon. It's the closest the moon is to the Earth this year. And sometimes you could get some reversals. So I'm thinking between Friday, Monday, Tuesday to be alert for reversals. Perhaps that's even going to be it in the dollar. So let's get to our individual instruments here. Back here, I was talking about a pullback towards a 113, 112 and a half level. Here we are. We're sitting right on the 200. Still not prepared to do anything here. So I'm just going to stand aside, but late to short it. Still think that there's potential for another rally. Maybe even back to the wall here. Which is going to come in back at the highs. So we have this falling wedge right here. Now it looks like it's only going to take closes back over 14 to start to squeeze the shorts. Remember, we've taken out all the shorts that had their stops over 114. So during this fall, all the bears were already taken out. So let's see what happens here. Still think there's potential for another wave to the upside. Yen's trying to make hay. We're almost halfway back. I thought we would get up to maybe 61.8 back near the 122 level. That could still happen in the days ahead. I still view this as a shorting opportunity up here and eventually to take out the 116 low. And here's the CAD. The divergence did hold from a couple days ago. Yesterday we attempted to rally to new highs without much success. Again, here's the line in the sand. If you want to stay bullish, short, intermediate term, Canada's got to hold this 131.25 level. I'm actually looking for some type of breakdown with the crude continuing up that we could see a trade back under the 130 handle. I'll be talking to Valeria Bednarik today. Everyone have a great trading day, good hunting, and I'll see everyone in the room. Remember, don't just count your pips, count your blessings. Good hunting, everyone.